A continuación, con ustedes, Lecciones aprendidas del modelo de Open Banking de Reino Unido, con Imran, Gulamhuseinwala.
Thank you very much, Edgar. It is absolutely wonderful to be here in Mexico City. I was reading on the plane on the way here that Time Out voted Mexico City as the 6th best city in the world to visit, ahead of Tokyo, Paris, Singapore, and many others. I've loved being here. I went for a run in the Central Park. I breakfasted in the Condesa. The food here is amazing. The culture is fantastic. The museums are brilliant. The city has everything that any other city in the world has. But wait, where is open banking? That's the question that we're going to deal with today. So my name is Imran. I led the UK's open banking initiative for 4 years, and now I advise governments, regulators, investors, and fintechs around the world. So by the end of this talk, what I hope to have answered is 3 important questions. Number 1, is open banking inevitable? Number 2, what should we be doing to shape it now? And number 3, how should banks in particular seize the opportunity? So let's start at the beginning. Is open banking inevitable? Well, I think so. The arguments for it from the government's perspective are becoming ever more compelling. The international consensus is that open banking is a good thing for consumers and for small businesses. Well over 50 countries now across the world are pursuing it seriously. The UK was the first to market. The EU is getting there under something called PSD2. Brazil is probably the fastest to market. In the Middle East, all of the Gulf states are in a race to get open banking delivered. And the big countries like India, Japan are formalizing it, Singapore too, and even now the US is looking to regulate it, but more on the US particularly later. But why? Why are governments around the world falling head over heels to try and get open banking implemented? And this really is one of the most important questions in open banking, the why, and it's also one of the most difficult questions to answer. Competition is a really strong driver of why you'd want open banking. But that's particularly so in the mature markets, where the banks have lower growth and more incumbency. Innovation is another big driver as to why governments want open banking rolled out. And that really does go hand in hand with competition, particularly in some of those mature markets. A third reason why governments want open banking is to support the fintech industry. In most geographies, fintechs are considered to be a force for good. They're going to be the growth industries. They're going to employ lots of people. And supporting fintechs is a big policy initiative. But also increasing financial inclusion. Now, of course, open banking isn't going to help anyone that doesn't already have a bank account. That much is obvious. But there are some very strong financial inclusion arguments, particularly around financial access. So people not being able to get access to credit can be hugely facilitated with open banking, but also financial education. What we still find in educated populations is consumers still making bad decisions when it comes to using financial products, and open banking can really help in that process. But yet, there are still even more arguments for the politicians to get their teeth into. Enforcing consumer data rights. So the concept that the data that is held by the bank belongs to the consumer and not to the bank is an important philosophical right that governments want to see enforced. Killing screen scraping. In many geographies, people still share their username and password with unauthorized third parties to be able to access their data. That does represent a systemic risk, and most regulators want to see that finished. In the EU, there's yet another reason why open banking is particularly strong, which is they don't like cards, or rather, they want an alternative to Visa card and MasterCard. And of course, open banking, when done right, can really help with account-to-account payments. And then the final argument, which is probably the biggest, most important argument for any politician and any government, is to stimulate a digital economy. And that does mean taking cash and turning it into electronic transactions, and it does mean increasing the tax take. But of all the things I mentioned so far, it probably has the biggest impact, and the one that, when I speak to treasuries around the world, are most interested in. And in amongst all of this, all these different ideas, reasons why behind open banking, it's important to remember that this tends to be bipartisan. So it tends to have support from across the political divide. Whether politicians are on the left or on the right, or even in the center, there are good arguments for them to follow for open banking. So open banking really has cut through with a lot of those issues. But I think the third reason why open banking is really taking hold across the world and is inevitable is that we can now finally see that it is working. Now, there are not many countries where it's working particularly well, but I'm proud to say that the UK is a very good case study of how it can work. We're not perfect by any means at all, but we can show a few things. We can show, for example, that the tech works. Now, I'm sure everyone in this room takes that as a for granted, but the moment you go outside and you talk to people on the streets, or you talk to politicians who don't really know about open banking, it's their number one concern. And in the UK, we've demonstrated that the technology is safe, it is secure. There haven't been a huge number of there have been no customer complaints. In the UK, we've got 95% coverage. We've got over 300 fintechs who are active in the ecosystem. We've got 7 million customers across the country, making 120 million payments per month with over 60 billion in value. The use cases are enormous. They range from across the spectrum, including particularly credit to consumers, but also to small businesses, payment of taxes. And many consultants, PwC, FT partners, have identified billions worth of revenue that are going to come from the open banking opportunity. But in the UK, on the other hand, we still only have a penetration of around about 15%. A bit lower consumers, interestingly, a bit higher for small businesses. And we've still got low familiarity and low trust. So we really are in the early days of open banking, even in the UK. And I have to say this, many of the fintechs are not making that much money. They're not making as much money as they thought they would explain to the VCs, and the cost of their funding is going up. So there are big changes coming, and that they will drive further adoption in the UK. One of the things I'm most excited about is actually mass market value propositions. It is interesting that when open banking gets launched, the initial propositions tend to be quite niche in nature, but actually now what we're finding is some mass market ones coming to the market. And for example, I'm excited to say that soon Google Pay and Apple Pay will be attaching open banking data, interestingly, to their cards in their wallets. And I think that's going to have a huge uptake. We're also going to see open banking in the UK for e-commerce, which is going to be very powerful. And we're beginning to see the rollout of premium APIs, which is another important point I'm going to get to. So I'm very excited that the adoption is going to continue to increase in the next 2 years. I wouldn't be surprised if it's more than 50%. But the key thing amongst all of this is that if you're a policymaker, even a 15% adoption rate actually marks success. Because what they look for is consumer outcomes. Consumer outcomes have been improved. Choice has been improved. It's now far more easier in the UK to shop around for a mortgage, a credit card, or an overdraft. People have better access to financial information. There's been a huge reduction in administration for small businesses, thanks to cloud accounting married together with open banking. There's a lower cost of collecting tax. Prices across the industry are more competitive, particularly in things like foreign exchange. So we have met our regulatory outcomes. And most importantly, amongst all of this, is that some of the worst fears that perhaps the banks were talking about at the beginning of open banking haven't come to pass. We have not seen examples of customer data loss. We have not seen a big increase in operational risk. And we've not seen a systemic risk to the liquidity of banks. All of these were issues that we got rather excited about in the early days of open banking. But we can now all point to the UK and say, you know what? These things don't happen. This is fine. I think the other really important point is that governments really do understand that open banking is just the starting point of a much bigger journey. And around the world, what we're seeing is that open banking is really a stepping stone, a foundational piece for the move to open finance and also to open data. So what do I mean by that? Well, at its heart, in open banking, once you've constructed that, you've essentially built a platform for data portability and data interoperability. And it really is sector agnostic. So what we can do is we can roll that out from banking, which is in essence checking accounts, into other really important financial services instruments. And I'm talking about things that mainstream people use, such as savings, mortgages, pensions, general insurance. And by bringing all this information together, what we can allow is consumers to see all their financial relationships, frankly, in one place, and to make better decisions based on personalized advice, based on reliable data. And clearly, there's an obvious use case now for AI to help them navigate all that information. And I was excited to read only earlier this week that Bunk, which is a digital bank in Holland, is probably the first bank in the world to create a pure conversational AI that can help consumers get a better understanding of their financial data. So if that's open finance, open data gets even more exciting because now the consumer can bring their information from other sectors. And the kind of sectors I'm talking about are sectors such as energy, telcos, transport, utility-type sectors, where actually they can make better choices if they've got the information. But it can also be extended to retailers, potentially also to big tech services, such as social media, content streaming. So reducing the stranglehold that some of these large corporations have on these important consumer activities. But coming out of all of this is also the potential for digital identity. I understand that Mexico is very similar to the UK. We don't have a consistent digital identity number or a unique number for our citizens. Some countries do, some countries don't. But actually, you can use open banking and open banking data to allow consumers to demonstrate or present attributes that they have based on the companies that know them well. And of course, the kind of companies that we're talking about here are the banks. So many countries are using open banking as an opportunity to go straight to open finance. For example, in the Middle East and Brazil, and Australia has actually created a structure where they can go all the way through open finance to smart data with some of the regulation they've created. And others are working on this. I'm pleased to say that the UK has only just recently published its smart data roadmap, and even the EU is contemplating working on PSD3. So there feels to be a real direction of travel around there. So I think the arguments for rolling out open banking really are compelling for governments around the world. But that doesn't make it easy. Open banking is hard. The governments find it complex. The regulators really do not have experience of pro-competition interventions. And that's really what this is. And of course, governments in Mexico and around the world have many conflicting priorities, particularly at the moment. So what could we do, second part of my thinking, is to shape open banking here in Mexico. And of course, I'm aware that open banking here stalled after a burst of excitement around about 5 years ago. I do think there is a chance that could change. You will soon have new leadership, and I think now is actually the right time to engage with that new leadership to put forward the case for open banking and to put it forward in a way that works for Mexico. As I described earlier, there are many reasons why you might want to do open banking, and each country deals with it in a slightly different way. And I think here in Mexico, depending on what the priorities for the country are, and I understand that fraud is a big priority, cash transactions are a big priority, anti-money laundering a big priority. These are great because these are things that you can shape open banking around. It won't be the 100% solution for any of those pieces, but it can be amended to lean in to those priorities. I also think that you can put forward the case to legislators and policymakers for open banking based on the lessons learned from around the world. You do not need to make the same mistakes that we made around the world that we made in the UK. I do believe if I had my time again, I could have done it in half the time for half the cost. So we should learn from that. And I think fundamentally, if you get on the front foot, you can make and shape open banking in the way that you want to shape it for Mexico. My learnings from the UK, my experience from the UK, is that lobbying regulators is a necessary but insufficient step in building support for open banking. It really is the policymakers and the legislators that have to be convinced first, not the regulators. Regulators' primary role really is to spot bad behavior and to stop it. Regulators are not really used to creating new products, let alone new markets, let alone new ecosystems. They find it hard to create mandates, especially for new and unregulated activities. They think about their regulatory boundaries. They're very concerned about legal challenge from regulatory overreach. So in my view, whilst the regulators really need to be receptive to what we want to do around open banking, the mandate really needs to come first from the policymakers. And at this point, some people, maybe some of you in the audience, will say, whoa, hang on, why do we even need open banking to be regulatory driven? Let's just have it market driven. And I have some sympathy for that view because many observers, open banking observers from around the world, really do split open banking into market driven open banking and mandatory or regulatory driven open banking. Now, I happen to think that that distinction isn't a really good distinction. I think that the question of market versus mandatory-driven open banking is actually a non-question. Banks transferring customers' data, customers' personal data, has to be a regulated activity. Fintechs holding customer data, initiating payments, has to be a regulated activity. I don't see any other way of interpreting that. And of course, the US, which is held up as an example of a market-led open banking initiative, hasn't had the regulation, and that is absolutely correct. There was no regulatory instigation to make open banking happen in the US. But in the US, it grew out of a fundamentally different why. The why was banks were architected on the state basis. People moved between states. So many people in the US were multi-banked. There was a clear value proposition for open banking. There was a need amongst American citizens to make it work. That's why you got open banking started in the US. But be in no doubt, the regulators are catching up. The regulators have been watching open banking in the US for many years and have been concerned about it as an unregulated activity. They've been concerned about it as a systemic risk. And finally now, late last year, the CFPB, the US conduct regulator, announced their intention to make the open banking APIs mandatory in the US and free in the US. So it really all comes back to the regulator. The regulator will have the final say. But you can make the regulator's life easier. You can bring them solutions, not problems. If you can come together, I think there is a window of opportunity that is open right now for you to shape the kind of open banking market you want here in Mexico. Some thoughts I have on that. Number one, form a consensus. That's the hardest thing to do in Mexico, anywhere in the world. It's hard enough to do in one organization. The number of banks I spoke to in my role leading open banking in the UK, where I had different contradictory views coming from different parts of one bank, it's obvious. But it's hard enough to do it in one organization. We need to do it across the sectors. We need to do it across the banks and the fintechs. And we need to do it in a way that stays stable over time. You might argue that's impossible, and I'm not going to argue against you, but I do think you need to try. And I think the reason you need to try is if you don't do it, the first thing the regulator is going to ask you to do, if they get serious about open banking, is to form that consensus anyway. So you're going to get there in the end. I think you should try. I think you should be clear to the regulator about the things that you must have. And it's becoming increasingly obvious what these kind of things are based on experiences around the world, not just in the UK. I think you need to be clear to the regulator that you need something around liability. The banks will not let the data go unless they can be comfortable that they don't retain liability for the data once it's left. You could argue against that, but I wouldn't. I think accept it and move on. I think you need it. Number two, you must have standards. Now, it's kind of funny to say that for many people, but actually, if you look in PSD2, the European Union's legislation, it doesn't mention standards anywhere in it. It doesn't mention APIs. But if you don't have standards, you will have a spaghetti junction of a mess of open banking. You will not get that data interoperability. Interestingly, governments find it very uncomfortable to mandate standards. That's a separate discussion. It's to do with monopolistic behavior. But I think you need it, and you should tell the government that you need it. Authorization, one of the biggest sticking points around open banking. Which companies can come into the ecosystem and play, and which companies can't? What are the rules and requirements of those companies that come in? What is the process for allowing them in? What is the process for removing them? That whole piece under authorization has to be, it's a fundamental part of open banking. Some people call it the trust framework. You can call it whatever you want. You need something like that. And you need to tell the regulator that's what you need. They won't argue with you, but it means they have to do some thinking. And customer protection or consumer protection, I think that needs to be built in right at the very outset of open banking. The regulator will not push back against. The regulator won't push back against any of those things, but they will be interested to know what the mechanics are, and I think you can help them with that. But there are things that we don't know for certain. There are things in open banking that are design decisions that are going to be specific to Mexico. And I think you should have a position on these. Not a position that is set in stone that you can't flex and change, but you should go to the regulators, go to the policymakers with a position on it. An example of one of these topics is to have an implementation entity or to not have an implementation entity. Now, I actually happen to think that that is another non-question. I think there is no such thing as having not an implementation entity. Obviously, in the UK, I led a very heavy or comprehensive implementation entity, and we did lots of services for the ecosystem. And other countries have started down the route of not having an implementation entity. But I can't think of a single country where, even if it started without having one, that didn't develop one in some shape or form. So even if you look in the EU, where they said not only we don't want standards, but we don't want implementation entities. The Germans created one. It was called the Berlin Group. It was all bank-owned. The French created one. It was called STET. And there were others that popped up all over the place. Even in places where there was no third-party implementation entity, the regulator played that role They may not have called themselves an implementation entity, but if you look at in Australia, the ACCC, which is their antitrust regulator, has a department inside it that implements open banking. In Saudi Arabia, SAMA, the Saudi Arabian Monetary Authority, their central bank, has a department that does exactly the same thing. So there are these, and I think you would even argue that FTX in the US is essentially morphing into an implementation entity, albeit one that is narrowly focused on the standards. So the question is not, do you want an implementation entity or do you not want one? It's what kind of one do you want? What kind of one do you want? Where is it going to sit? Who's going to pay for it? What kind of governance is going to sit around it? Who's it going to be accountable to? And what kind of delegated powers is it going to have? And I think that's a really crucial element, because if you remember, I'm talking about trying to make the regulator's life simple. One of the best ways you can do that is giving them a mechanism for delegating the how of making open banking work. That's one of the primary reasons I think implementation entities are a good idea, such as we had in the UK. Another example of a topic where you're not all going to agree, but actually it'd be good to have a position on, is premium APIs. So premium APIs is a concept where you don't have to provide these APIs to the market, but you can provide them on a commercial basis for a fee. And I think that's really important because it helps with the monetization of open banking. And it creates something that I like to think of as a competitive space. And quite where you draw the line is really open to interpretation. But I still think you should have a position on it. Another thorny issue, these are difficult topics within open banking, pricing. Should these APIs be provided to fintechs for free, or should there be a price for it? It's really hard. I'm not sure that I would even profess to give you a view right now, and I don't think you should go in hard with the view, but you should go in aware of these difficult concepts. Should pricing, if you do go down that route, provide cost cover, or should it provide margin as well? What is a fair price? Who sets it? When does it change? But I think you should, so if we've talked about going to the regulators and helping them with things that you need to have, and then having a position on things that are complex, I think the final thing is you can also go to them sharing the learnings from around the world. There are many, potentially, but I think three of the most interesting ones are, I feel that you do need to have tight standards. I think standards should be very clearly defined, and I think that banks and fintechs should work very hard to implement them as designed, because I think that's the way that you reduce a lot of the friction in the system. I think in a similar way, monitoring is crucial. Arguably, monitoring is more important than the standards. In some regards, I think the standards are now the easy piece because there are so many versions of them around the world. But monitoring them, monitoring availability, latency, uptime, these are really important things. I think another key learning is that open banking countries where they've had more success is they've been less standards-led and more use case-led. So they think, what is the outcome that we're trying to create in the market? What data do we need? And therefore, what standards do we need? And I'd go even one step further, which is that I would argue that we need to move from use case open banking or use case-led open banking to sustainable open banking. So one of the things I've noticed as I've gone around the world is that not enough thought has been put into the models, the revenue commercial models for fintechs and the revenue commercial models for banks. So ensuring that we have a sustainable ecosystem, I think, is really important too. And then the final key learning that I would suggest you take to your regulators is the importance of creating a roadmap and a vision for open banking, open finance, and smart data. One of the biggest problems we had in the UK is that it wasn't clear where we were going. So we tackled each piece as it arrived, and we fought and argued over each piece. Whereas if I think we had a roadmap that stretched beyond open banking, I think everyone would have relaxed a little bit more. The banks would have seen the value of getting into open finance and beyond. The fintechs would have been more comfortable that there was a roadmap, and we would have had a vision to tie it all together. So across all these points, you clearly will not have the perfect answer. But I hope you begin to see that I think it's unreasonable to expect a regulator to come up with all of this by themselves. It's complicated stuff. But I also think the point is that you don't need to build the solution right now. You can take a leaf out of the startup handbook and get something up and running. Do not let the perfect be the enemy of the good. And I really do think if you don't get ahead and shape it the way you want to shape it, the regulators are going to do it for you. So I'd just like to turn my attention now to the third part of my talk, and maybe we'll have time for questions, which is how should banks in particular seize the opportunity? I've talked now a little bit about sustainable open banking, and this is a large part of it. When I first took on the role in the UK in 2017 to run the implementation entity, one wise person said to me, very experienced of working with the banks, he said, when you deal with the banks, just have a useful framework in the back of your mind, the comply, compete, innovate framework. Just think about it as what proportion of resource are they putting against comply, compete, and innovate? And he said to me, you should be careful, because it's not going to be what you think it is. It's going to be like 95-5. This is going to be all about compliance. And I have to say that he was wrong. It was 99% compliance, 1% compete, and 0 innovate. And I do sympathize with the banks on that point, because they started on the right foot. They started with a 60-20-20 or a 30-30, whatever, in their mind. They wanted to do the right thing, but they got bogged down. They got bogged down in the complexity. They got bogged down because they were carrying too much technical debt. They got bogged down because they didn't have basic API infrastructure. They were bogged down because they couldn't operate sandboxes that allowed third parties to come in. And everything got big and complicated. They missed their deadlines. They upset me, and then I upset them. And what ended up happening was, I mean, you've heard of a minimum viable product from startup terminology. Of course you have. There's a new concept that I became aware of, a minimum compliant product, which is what the banks ended up, not all of them, but what they ended up producing. And I really think that you also need to get ahead of that wave so you don't get bogged down in the hard yards of open banking. I think it was mentioned earlier, I do think you should adopt an open banking mindset. And that covers a whole list of topics. I thought I'd just start by explaining to you how I think about the opportunities wearing my open banking mindset cap. And I think the opportunities for the banks are best dealt with if you start with the small and easy before working to the hard and complex. So my escalation of opportunities essentially goes along these lines. Number one, what benefit does open banking provide to the organization itself? And by that I mean, how can the organization benefit from having more of an API culture, a microservices culture? How can it benefit internally from maybe using one single data source, managing all the different applications and versions, reducing some of the cost of duplication, batch processing, allowing other products within the organization to get access to the information? I remember one of the most excited I ever saw one of the banks in open banking in the UK was when one of the banks came to me and said, we've got a customer for our open banking consumer data. And I said, that's brilliant, but the standards aren't live yet. You shouldn't be live. You know, we have a process. No, it's not live. It's not going external. Our own mortgage teams are using it. We're using it internally. So I thought that's number one benefit, the easiest of them all. The number two benefit is, what is the benefit to your customers? And here, I think it's about what else is going on in my customer's life that may need them to access different providers other than me. And it takes me down the route of partnerships as the bank, thinking about partnerships so I can bring a better customer service to my customers. It's about bringing in external data outside of maybe the banking environment to support the customer in my environment. It's about using AI to make sense of all that information. The third one, then I think, is how do you monetize the APIs? Now, often many banks go straight to that one, and I think you need to build up to it, build the ROI, the business case around all of these pieces. Monetizing APIs is possible. I talked earlier about premium APIs, so these APIs that sit outside of the regulatory mandate, where you can charge for them. We're seeing some great evidence of that in the UK. It's still early days, but particularly around the areas of identity and payments. There's a lot of demand from fintechs out there. And guess what? The fintechs want to pay for it. The fourth one, and we're getting more complicated now, is actually how can you sell more of the traditional existing product that exists within your organization through this new channel? Some people call this embedded finance. There are lots of crossovers between embedded finance and open banking. The underlying componentry is very, very similar. And then the final one, which I think is the big picture strategic piece that should be in the mind of the CEO and the board of your organization, is how do you position yourself around open finance and arguably even smart data? There is every potential for a bank to become the gatekeeper for all of these other data sources, all of these other sectors. There's every potential for the bank to become the digital identity provider for the consumer. Consumers fundamentally trust their banks. And we've seen that through the cycles. And the banks have done some pretty bad things, but the consumers still keep coming back. And banks know their customers because you've KYC'd them. This puts you in a fundamentally different league from big tech. They aspire to have those attributes, and I know we're close to it. In addition to all of that, customers now know how to authenticate with you. They're so used to using their banking apps in a way that, I'm not sure what it's like in Mexico, but in the UK, if you say to someone, log on to your pension, they'll look at you with a blank face. I don't know. I don't know how to do that. Log on to my mortgage? I don't know how to do these things. Log into my bank? Yeah, done it. Let's go. So I think there is a real potential strategic position for the banks to occupy if they get this right. And it's not all made up consultancy jargon. You know, spend some time in the Nordics. Look at how the banks are essentially providing digital identity to the entire population to enable them to access a whole raft of other services, including government services. So I think it's important to have a strategy around the opportunity set, and that's part of the open banking mindset. There is a question about how you get this done. What does the open banking mindset help us think through there? I do think some sort of organizational structure where you create some sort of business line that is discrete and responsible, accountable for open banking, can be a smart thing to do. It's interesting that NatWest, who is probably the leading bank in the UK on open banking at the moment, actually has a new business line. It's called the Bank of APIs. Interestingly, it's not called the open banking business line. Open banking is not a product, it's an enabler. So the Bank of APIs is the way that they've constructed it, and I think it's really exciting. But I also think that they got 4 success factors right as part of the open banking mindset. And if I may, I'll just explain what they are. Number 1, it starts with vision. Vision is really important for something like open banking. I'm talking about within the bank itself. The vision really ought to be long-term. It ought to be stable. Those are really hard things to do in a bank. I get that. It should be endorsed by leadership, and even when the leadership changes, because this is a long-term play. I think that culture, number 2, culture, is really important. Banks that succeed in this space need to create a culture that is clearly defined and that enables talent to take bets and succeed in this space. A culture, if done right, will create alignment around non-open banking parts of the bank. Open banking is a horizontal. It cuts through lots of different pieces. Culture is one of the best ways of making sure the bank pulls together. Number 3, obviously, is technology. That may be why many of you are here today, but I still put it as number 3 on my list. Obviously, you need APIs. But I think you need a technical department that is comfortable and accepting of open standards. Not all are. That is comfortable and accepting of collaborating with ecosystem partners. That, for some banks, is a big mind shift. And then the 4th element of the open banking mindset is, of course, the operating model. And I think the operating model is crucial here. You do need agile teams. You need multidisciplinary teams. You need teams that are product-led. And I would say as well, you need teams that are in-house. There are many consultants in this space that will take the problem away from you and deliver you a PowerPoint at the end. But I think this is actual muscle memory that you need to build inside the bank. Maybe not on day one, but you need to get there. So look, in conclusion, I hope I've got across to you why I'm bullish, excited about open banking across the globe, but also particularly here in Mexico. I also hope that you can see as well that there is lots that you can do now to shape open banking and create something that you want it, the way you want it to look like in Mexico. I do think that doing nothing is not an option. And finally, I hope you see that I think that open banking is not a zero-sum game, but rather there is lots of opportunity here, of course for the fintechs, but also for the banks as well. Thank you very much.